Before the weekly analysis begins, I just want to let you know that I do have a Patreon page. We have two tiers available. The first tier is called Start Off for £15 a month, and what you will receive is access to a Discord server containing the beginners, intermediate, and advanced course, risk management course for Elliot wave trading, as well as financial literacy content. This tier is also for those who want to learn at their own pace and generally just support what I do and just join a community of like-minded traders. The second tier that I have is called the Waveologist for £35 a month, and what you receive is everything that I mentioned above with the addition of specific chart requests for me to annotate on a daily and weekly time frame, and one-to-one support or group sessions depending on how many people have subscribed to this tier. The group or one-to-one sessions are for those people who want a little bit of extra help with their Elliott Wave education and also give the opportunity to ask me as many questions. Please do keep in mind that these are going to be 1 hour sessions depending on how many people have subscribed. And also, I would say please do consider joining. It is really good value for money. And without further ado, let's get into the analysis. Alright guys, welcome back. This is going to be my 8-wave analysis or forecast for the S&P 500. But first of all, any views or opinions that I express in this video do not constitute to trading or financial advice. So obviously from my previous video, I did say that we had this sort of two scenarios in play, where we had this to be a 1, 2, 3, 4, 5, giving us our wave A. This is our sort of connector, which is our wave B, and then we have a wave 1, 2, 3, 4, and a 5, which is a wave C. And where we are currently is in this. Obviously, if you look at my first S&P 500 video that I ever made, we are currently in that wave 4 of the fifth wave in the extreme higher degree. It's like the final leg, the final stretch. And we currently had this sort of rejection, sort of had like a sort of nice doji candle with a bit of a bigger body. Then we had a sort of green candle to give us that sort of signal saying that we want to continue going towards the upside. We had this nice trend line which acts as a dynamic support and resistance, and we had sort of rejection coming back, and then we had a nice sort of clean break, and now we're coming back down to eventually test this trend line. Now this could obviously, if you look at the subdivisions of this wave right here, this could be a leading diagonal, as you can see right here. This could be a leading diagonal where we have a wave 1, 2, 3, 4, and a 5, and this could be our simply wave 1. And where we are currently is in this sort of corrective structure, maybe a expanded flat or a running flat. But that basically gives us an A, B, and a C, and that will give us our wave 2. And then from in and around these areas, we could then see the market just push up to the upside, and that will give us a sort of wave 3, um, push to the upside impulsive leg after our wave 2, and then this will basically confirm the completion of this ABC structure of the wave 4 in the higher degree. Obviously that's my bullish scenario. I did also say that we could be in this sort of pattern right here where it's like a you could say it's a wave 1, wave 2, wave 3, wave 4, and a wave 5. I don't think that's going to be a possibility anymore just because of how far this wave 4 is coming down. So I'm going to suggest that we are currently in this sort of structure here, corrective structure, and we are eventually going to make sort of ways down a bit more and then go up again, to give us that third leg impulse. So that's obviously on the bullish side of things. Now on the bearish side of things, my other scenario that I have in play, which I showed last week, was instead of this being a 1, 2, 3, 4, 5 or an ABC corrective structure, we now have a an A still here, and where we are currently is in this sort of B wave, which is actually giving us a sort of longer or bigger correction. So it's moving like this sideways, and it's basically give us a nice expanded flat correction right here. So where we are, what we're expecting is simply this, and then go up one more time, and then once we get to this level, once it comes to take out these highs, we could eventually see some sort of significant rejection to bring this market back down to the downside to give us our C wave. So what we'll expect is a simply 1, 2, 3, 4, 5. That's an A, B, and a C into a B, and then that'll give us another 5 wave impulses to the downside, giving us a wave C, and then wave 4 would end here before we then get that sort of push to the upside. So I hope you guys like my video. Please do like, comment, share, and subscribe. I do have a Patreon for those people that are interested in mentorship. You guys will have access to my private Discord, and yeah, I'll see you guys on to the next one. Take care.